Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To open today's webinar, the Australian dollar trades very modest overnight as the range holds tight within the boundaries of 73.55 to 74.30. On the day, there is some bias that the market may challenge towards the upside of 74.30.40, but is unlikely to sustain, with the overall outlook holding towards 73.55 and lower down towards 73.10 as a recent objective and low of this week. The upside resistance at 74.30, if breached, could see short-term covering, but I anticipate to see fresh supply coming towards that 75.05 10-15 level. In light of the current pattern, overall I still feel the market is poised to go lower towards 73.10 and then down towards an objective of 71.40.80 and reassess from there. With the dollar index printing printing a near new high of 102.10 overnight, the euro prints a fresh low of 105.15, 17 level. Now, in light of the current pattern, we've nearly claimed the objective of 104.70.90, and now I expect to see one more challenge to the downside. In the current pattern holding at 105.15 to 105.90 in a range today, fresh claims to the downside and a break of 104.70 would expose further weakness towards 102.40.90 area. However, we are oversold and I'm getting a little bit cautious here due to the fact there is some bullish divergence. As you can see, the market's pushing lower and the histogram is going up. This in terms could see an impulse away from that 104.70.90 objective and break through the 105.95 and on towards 106.55 and maybe even claim the highs around 107.20.25. This is warranted due to the fact that we are so oversold. And as you can see here, looking at the times when we were oversold before, you can see here there was bullish divergence, the market rallies higher. There was slight divergence there, the market rallied higher. You can see here at the moment there is bullish divergence, so we should see a move away from any downside challenge with the support holding around 104.70.90 and staging a recovery. So do be a little bit cautious for the shorter trade. As I say, I expect to see a move up. Now, with that being said, if the market does dismiss the current indicators in terms of the US dollar being overbought and the euro being oversold, then we could actually just see the market plummet further from a break of 104.70 to that 102 region. Dollar yen defying gravity as the market rallies on higher overnight and prints an 8-month high. I am a little bit cautious of any bullish move from current levels, purely for the fact is that if you look towards the recent challenge highs around that 114 level, resistance did come in very, very well, and it was the beginning of that downtrend towards the late 2015. Now, as I mentioned, the indicators are overbought on the dailies, clearly here. So this in terms suggests that we should see eventually a pullback away from anywhere around 113.60 to 114.40 and look towards the support of 112.40.45. A break beneath 112.40.45 targets 111.30 to 110.50 and reassess from there. In the unlikely event we do get a move through 114.50.55, then this would trigger a rally onto 116. But at this stage, it is a little bit unlikely, purely for the fact is that over the last 3 weeks we have rallied 12.5 big figures. So just be aware for the bull trade that may not come through. Sterling, very much quiet overnight and trades in a sideways pattern and still locked in within the parameters of 123.60 to 125.0520. I'm still looking for a further downside move while 105.20 holds, with the initial objective holding towards 122.2025. On the top side, a break of 125.20 would give further exposure to the upside, but should be contained around 126.40. Gold moves lower overnight to 1,180, a fresh 11-month low, and still looks towards the objective that I'm seeing of 111.50, and reassess from there. We are a little bit oversold in terms of the weekly, but on the daily we are getting closer to that oversold region, but the trend is still very strong and no divergence, and the histogram is still comfortably declining. So in the next day or into next week, I do see at least a $20 move down, but towards that 50-60 level could see demand returning and may actually stage a mild recovery back up to the region around 1,192 to 12,000. Sorry, 1,202 to 1,204. Sorry about that. And to wrap with oil, interesting to see there was no demand overnight and actually consolidates in a very tight range. One more day of this price action, then it would give further indication that we could be moving back towards that 46.40 level. A break beneath there exposes a $43 a barrel as an objective. Though the call has not been completely made from the histogram to support a downside move, so we still hold into that very fine thread that we could actually move up towards $50 a barrel before seeing a complete turnaround. Well, that wraps up my daily video. Thank you very much for joining me, and I hope you have a great weekend ahead.